we've spoken several times, and you've been, a regular on Kitco for many, many years. This is the first time that I can remember, at least, that you've been neutral on precious metals. You were telling me offline. Can you walk us through the logic of that call?
Back in the day when I was talking to Daniela, I was often quite negative on them. We at Exploration Insights have been positive the past few years. I think right now I'm neutral because I can see, some stability and reason returning back to the White House. And I think that's probably going to decrease some of the volatility and risk out there. I also see as the vaccine rollout finally starts kicking in, that will be a bit of a negative to the gold price. So in the short term, I guess you could say I'm neutral. Further out, I can see with all this debt stimulus and the potential of the dollar losing its status, gold doing quite well. So further out, we're looking at a better gold price.
So your thesis here, is it safe to say that your underlying assumption is that gold needs instability and volatility before demand goes into gold?
To some degree on the short term, but again, in the longer term, it's really all about devaluation of the dollar we're going to have another $2 trillion of stimulus going into the sector after $7 trillion the past 2 years. All it's going to devalue the dollar. And we're seeing the rest of the world sort of backing away to some degree from the US dollar as well. Okay. So looking out 1, 2, 3 years down the road, I'm pretty positive on the gold price, but right over the next 6 months to a year, I guess you could say I'm neutral.
6 months to a year. So if you're neutral, then would you think that the current price is reasonable? That's where it should be at right now?
Yeah, I think so. I think it's a reasonable price. And I think it's a good price. I mean, most of the major mining companies are making plenty of money. And I think a positive we're going to see is that as mining companies are able to send their people out to different parts of the world to look at and evaluate projects, we're going to see an increase in mergers and acquisitions from mostly the mid-tier companies trying to grow, picking up early stage resource properties with at least some sort of resource to find that's legitimate. So I think, that's a real positive. And that's kind of where Joe and I are focusing on. What are the mid-tier to larger companies going to buy over the next year?
It's interesting you brought that up. I was just speaking to a mid-tier the other day, and he told me that, there's going to be more consolidation in the sector most likely. And he said that they've always got it raw on the miners. They really should be making deals when the price is low, when the gold price is low, not at $1,800, $1,900 an ounce levels. That's when bad deals are made. But anyway, most deals are made at a higher price, and they really should be buying it at a lower level. What do you think?
For sure. And you watch, that's what Ross Beatty, for the most part, does and the way he's done so well. The problem they've got is when prices are low, they've got no money and nobody cares.
Sure.
It's sort of a counterintuitive business in that the smartest thing to do is when you can't do it.
Yeah. What do you think they should be doing with this extra cash that they've accumulated over 2020 for the most part?
Dividends for the majors is probably a good idea given they're trying to attract major funds and such, but I think it's better to put it away and wait for that opportunity to buy something that you need. Because, consider we're running through, on a global production scale, a Carlin trend a year. That's 90 plus million ounces a year that's going, and we're not finding even a third of that through exploration. So there's certainly a shortage in legitimate quality gold deposits out there that the majors are going to be scrambling for down the road.
So in 2011, there was a series of bad deals that were made, and that investors that have haunted investors for years. The same concern has popped up again this year. Now, as I said, more consolidation is expected. Are you concerned about this risk reappearing?
Certainly. Again, the base problem is it's really, really difficult to find a good gold deposit or a silver deposit. Most of what you find is marginal. You're looking at all these deposits out there that were bought in 2011 and such, and some are being bought again, like Cote Lake, and they're marginal at best. But that's what's out there, and there's pressure when the gold price is high from shareholders and such to go out and buy something, and that's what they do. There's very few deposits out there that are really high margin deposits. I mean, gold doesn't sell for $1,800, $1,900 an ounce because it's easy to find, does it?
Are there jurisdictions where you might find a higher concentration of these higher asset or higher quality deposits?
Probably the riskier places in the world.
Okay.
Although there's certainly some in Idaho that are starting to look pretty good that I think are high quality. Not so much I've seen in Nevada. Australia, there's a few good deposits out there that I think a larger company could buy. Africa, if you're active in Africa, there's some good spots there, in West Africa particularly. So yeah, there's still some places to be looking.
Okay, let's go back to the economy. Now, you were neutral on precious metals. Are you overweight specific other metals now?
I wouldn't say overweight. Again, it comes down to what Joe and I are after are quality discoveries and deposits that offer a high enough margin that the junior company that owns them are not going to have to build it. We want something good enough that someone else is going to come in and buy it. So I think we're about right. We've got a few nickel companies, we've got some copper companies, a PGM company, and we're scattered across both the Canadian and Australian exchanges.
So it sounds like you're leaning more towards base metals now. Is that correct?
Somewhat. I would say yes.
Okay. Is there a fundamental economic reason for that?
Well, I think with the electrification and green energy coming much a bigger part of the global economy, that's going to take up and require a lot more copper than we're actually finding. So copper should do well, and legitimate discoveries are going to be attractive to the major mining companies. Nickel is the other one we're keen on, because good sulfide nickel deposits are what you need to build the batteries for all the electric vehicles and such. And again, that's going to be key. Is, for instance, we're invested in an Australian company, Blackstone Minerals, who have an agreement with a Korean battery manufacturer, so that there is likely an offtake agreement to the deposit they're defining in Vietnam. That's the sort of thing we're looking for, where we've got a downstream buyer, if you will, that will help fund the development of the project.
Okay. And what are the major risks that you're looking out for as an investor, that all investors should be paying attention to right now in the space?
Well, certainly the general markets have done exceptionally well. I mean, they're way, for the most part, overvalued. I mean, we know Tesla and Facebook and such are just nuts. And at some point, that bubble's got to pop. And what I've noticed is that when that bubble pops, it takes down the mining companies, the gold companies, just as hard, regardless of the underlying metal prices. So that's sort of something I'm concerned about. However, with the $2 trillion coming into the market, stimulus coming in, all that free money, if you will, has no place to go but the stock market, because there's no place else to invest it. So, I mean, that's a concern that I think we need to watch. We're due for a bust, or at least a downdraft, and that's what I'm watching, I guess.
Now, you brought up a key point, which is that regardless of the metals prices, if stocks go down, it'll still bring down the miners with it. So let's suppose the stock market falls, but metals prices rise concurrently. What would happen to miners in that case?
What I've seen in the past is, in a real downturn, we were looking at major drops in the major markets, everything gets sold.
Right.
And that, I guess, that's the opportunity as well. We did really well when the COVID crash hit, buying major mining companies like Pan American Silver and such, because we knew the underlying fundamentals were good. So I guess, although that's something to watch for, it's also an opportunity to be ready for.
One thing I've noticed speaking to some of the seniors over 2020 is that they're planning to, if not already have, raised dividends. And I wonder if that would change your preference or bias towards more seniors in the long run.
Personally, I don't really buy major mining companies. My focus is on the smaller end of the sector. I think by increasing the dividends, they're looking to bring in major funds out of New York and whatever. that's what they're doing in terms of the dividends. And they also, the major mining companies have got to worry about ESG now as well. That's becoming a major question for the funds that want to invest in the mining sector. Is what is your ESG?
It wouldn't entice you to at least consider it?
Not really, no. That's not what I do. I mean, I own Pan American Silver, and I'm happy with that. That's probably the largest company I own.
Okay. Now, you made an interesting presentation recently at the SOAR Financial Conference about how investors should be reading a news release presented by a miner. I think that's fascinating. Can you walk us through this? It should be very educational.
Yeah, briefly, I mean, I look at news releases all day, all the time. And you've got to consider a news release is really a promotional piece that the company's putting out. And you've got to view it from that perspective. And I think a legitimate company will put out a couple of paragraphs to just tell you, this is basically what's going on. Anyone without a technical ability can understand it. And then they need to include the details, the backup data. And that would be plan sections, cross sections through the earth with the drill holes, long sections, a table of assays, including, all the assays, all the holes drilled. I hate it when they just say highlighted holes and they give you holes number 5, 8, and 7 when they drilled 15 holes and they don't tell you what the rest are. That tells you a lot right there. I guess the company that does an excellent job of that is Integra. You go to their website, pull up their news release, and you can see that everything is there with backup data, links to a video, etc. You can explore everything. So that's what a news release should contain. If it doesn't, it tells you one or two things. Either they're trying to hide something or they're incompetent. Either way, it's an easy pass.
Okay, so when you get something like that, a news release that highlights either they're trying to hide something or that they're incompetent, what do you do then? What's your next step? What's your thought process there?
Well, I just move on. I mean, there's so many things to look at.
Okay.
I move on. In fact, if I see a real, what I consider a scam,
okay,
I'm happy to jump on Twitter or wherever and kind of mention it. In the letter, I used to do that reasonably often. Okay. And I think that's fair enough. I don't want to jump on, I don't want to be negative on everybody, but the reality is it's really difficult to find an economic deposit.
What's your Twitter handle so we can go follow you next time you post something like that is a scam that we should avoid?
It's Brent COO7 and then some more numbers. I'm not sure how I ended up with that.
Have you made any tweets like this recently?
Yes, I have. One of the things I pull out a lot is there's this idea where either a deposit's an underground or an open pit, or you can combine the both depending on what. But when you get a drill hole from a company that has, say, 100 meters of 1 gram in the first drill hole, in the second drill hole, you're looking at 5 meters at 15 grams or 2 meters at 20 grams. What is this thing? Is it a bulk open pit deposit or is it a narrow vein deposit? And what happens all too often is a company will take a very narrow interval of high grade and mathematically smear it across a long interval, such that what was really a 1 meter interval of 50 grams becomes a 50 meter interval of 1 gram. And that's a whole different concept as to what the deposit might be, what the economics behind mining it might be, etc. So that's something you've got to be aware of. And then on our website, towards the bottom, there's a tool you can use called the drill interval calculator, where you can put in the big interval and then the little intervals and see what the remaining material is, the residual material grades. And that's very useful.
But I think part of the issue is even if a company links to their data, not a lot of people know how to read or interpret this data. So I'm looking at a bunch of geological data. How do I know that this is still not a scam?
Well, I guess it ultimately comes down to, you need someone technically competent to give you some advice, be it a stockbroker or your brother or a newsletter writer. But generally, I find if people give you all the information, at least they're trying to convince you or someone technically able to understand the data, what they're doing, and they're doing something worthwhile. Another issue I have is a lot of companies are looking for something that even if they're successful, it really doesn't impact the share price. Basically, the deposit they're after is too small to be worth a lot in terms of the share price. I mean, I did an example of, I think it was Heart Gold, where the share price declined until and they're in production now, from discovery to production, yet the market capitalization went up. That's not what you want. You need the share price to go up along with it.
That's interesting. So the share price went down, but the market capitalization went up. That's
correct. They keep issuing shares, raising more and more money throughout this thing.
The shares outstanding have changed a lot. Fair enough. All right. So Brent, last question. Your top stock picks for 2021.
My top picks. I'll give you a couple that I own that I think are worthwhile. One is Hannon Minerals, very early stage grassroots exploration on the backside of the Peruvian Andes, a whole new concept. They've got a joint venture with Jogmec, who's paying for the exploration and can earn 75% by producing a feasibility, I believe it is. Long shot, but really, really intelligent idea. Good idea. If it works, it's huge. It's massive. Another copper one, much more advanced, to be Trilogy, which is active in Alaska. Last year, they didn't get any work done because of COVID. This year, they got a big program. Again, they've got a partner with South 32, I think, in copper projects, at least large ones. It helps to have a partner with you. On the gold side, I guess I'll go with Liberty Gold, who are drilling out a very large, low-grade open pit deposit in southern Idaho. I've been there a few times. They're doing it right. It's going to be a large deposit, and the economics so far look pretty good.
Just out of curiosity, have you ever visited some of these more dangerous jurisdictions for site visits?
Oh yeah.
And what was the experience there like compared to, let's say, going to Idaho or Nevada?
Well, I remember flying into the Congo. We flew in on a Learjet, landed at this little airstrip, and the customs guy comes out. And he's a kid, must have been about, 15, and he's got a machine gun that is half as big as him, and he's the guy we've got to go through to get in. And the people I was with just paid him a six-pack, and we were ushered on through.
Wow.
That was interesting. And then getting into the customs office, it was all shot up, so we just kind of climbed through the glass and went in.
What about infrastructure and sort of, the quality of the machinery, the developments of the site? How do they differ in, let's say, in the Congo versus a developed nation?
I guess that depends on the company doing it. I mean, you go to barracks operations in the Congo, and they're first class.
Right.
But some of the smaller private deals, or just the garimperos, or those guys in Brazil, you go there and they're just lowering people down on a rope in a bucket.